Our conditions shifting back to mildly bullish in this bull market. We have seen S&P 500 move back into this transitionary state. When we see yellow, we're transitioning a trend. This could be a transition from red to transition back to red, or from red to transition back to green. Essentially, are we in this uptrend? Are we in a downtrend? Or are we transitioning between one of those? Obviously, the really strong, powerful bull market that we've been in, we're now majority bullish still with this little bit of a hiccup right here. So that's one of the things we're watching right here is in all of these pullbacks that we've been getting over this last year on S&P 500 have just been opportunities to be buying into that overall bull market. The question is going to be, at what point does that no longer work? One of those things we can look at in this case, if we look at S&P 500 on this weekly time frame, we really expanded into or away from that consolidative phase, that compression state of trend on S&P 500. This was going back to 2000 or 2022, the retracement that we had, the bear market essentially, and then been moving and extending that trend higher. So now we've moved fanning out of that area, the width of that trend now on that weekly time frame. Is that sustainable without some kind of a retracement? Once we get those trends that are expanded versus compressing, then the probability is for us at least some consolidation, if not some reversal right here. So it's going to be interesting over the next few months to see how this market holds up. Certainly a lot of good things happening here as well. We're seeing interest rates kind of stabilize. That is an issue. We'll look at that here as well. But the internals of the market are still pretty weak. If we look at the stocks above the 50-day moving average, still down at 30. We had dipped all the way down to about 18, which means that 70% of S&P 500 stocks are still are below their 50-day moving average. So we're seeing a pretty big move across the board. If I move that out a little bit, you can see where that possible range could go, kind of the depth of that retracement, all down to that 10 number. And we've also broken down through this area right here, which is right about where we're at right now, that 30 range. So this is internal breadth of the overall participants of the S&P 500, which are just not participating. And so you're getting a handful of stocks that are moving the S&P 500 higher. That's fine. That just may not mean that there's longer term legs for this rally, at least within this current trend. We'll see how this pans out going forward. VIX is also showing some, in this case, weakness again, which is strong signal for stocks. The volatility had a big spike right here. It looked like we may start to roll back over again, and but we almost immediately had some positive economic news that took the market back up again, took some of that fear off of the table. So typically that is opposite. So here you've got 14 bearish on volatility, and you've got 14 bullish on price activity or on momentum. So those two should be working in opposite. The VIX you want to see. So those can also be watching for extremes. Now we're getting a compression of trend with VIX, and we had that big spike right here. That's also an indication that there is some pent-up fear, that some trigger happiness that really could happen quickly if we get some data that the market doesn't like. So far, market has been liking this data that's been coming out over the last week or so. If we jump over, we're seeing yields continue to move higher. This is a chart of the 10-year Treasury yield, and SHY, the short end of that yield curve, continuing to have majority bearish at 14, continuing that retracement, which again means that interest rates are going higher. This is the SHY is the 1 to 3 year Treasury. This is the 10-year. TLT is the 20-year. So as that's continuing to drop, then interest rates are going higher. So we can spend a little bit of time now being able to just look at that correlation here with this bond, with the 10-year Treasury as well. Seeing that 10-year Treasury gaining some bullish momentum. That's not necessarily what stocks are going to want, what the economy is going to want. We'll see if that pans out here over the next or this next week. It's going to continue to be relatively light for the remainder of the week, even going into next week. Let's jump over and take a look at some of the sectors. Seeing some continued extremes to the downside, but technology, consumer discretionary holding up in that overall uptrend. The majority of these others had been relatively weak though, but we are getting, once you get those trends that are expanded to either aggressively to the downside or the upside. In this case, you've now got 10 to the downside, 10 bearish, and 4 bullish. So you're getting a little bit of a potential turn in trend. This is the 1 hour time frame here. This is highlighted in blue just because my box is on this chart. If I were to click on this other time frame, you can see that switches over to the 1 hour. This is the daily time frame. This is looking at industrials. Going to have a similar pattern to the DIA. If we take a look at DIA, you can see here a little bit of strength after some pretty ugly selling here in the Dow for really the last few weeks. Let's jump over, go and take a look at energy. The rest of these sectors, again, showing some weakness, but we are looking at that expanded trend. Once that starts to happen and you start to get that overall selling that starts to dry up a little bit and start to get some demand that starts to come back in, doesn't necessarily mean that it could reverse and head higher. Potentially just could be a counter trend that may take us back up to some resistance areas. It's an area that if you are contrarian and you're looking to, for a location to be buying into support ranges, these extreme areas where you're getting some new demand starting to come in can be early indication of some new buying. It can also be risk that you may not want to enter into if you're trading counter trend. If you're trying to buy into a downtrend, ultimately that could rally out, find the resistance, and then continue that overall downtrend. Just allows you to be able to position to decide even if you want to participate in that area of the economy. You've got financials, which are getting a little bit of a pop here. Again, most of these markets, you're seeing those downtrends shifting back into transition and then back, and now moving up into a potential new uptrend. They've got some work to do. You can see here on the 60-minute time frame and that 1-day time frame. This is on the financial sector, real estate sector, majority bearish here at 11, majority bearish at, 14, majority bearish at 11 on real estate. You can see there is a little bit of nibbling starting to happen across these sectors as well, all over on this 60-minute time frame. Basic materials. So we can see an oversold bounce here on S&P 500. We're seeing a lot of these sectors also starting to hold up here and find some support at these ranges. Consumer staples, transportation. I'm going to move some of these through some of these relatively quickly. And then if we take a look at commodities, we've got USO, which is really trying to gain some bullish momentum. It does now have this majority bullish structure at 11 on the daily time frame and 14 on the 1 hour time frame. Even though this price activity is still consolidating, you're starting to see those trends just gradually starting to shift back to the bullish side on USO. GLD, which is gold, continuing to have a little bit of weakness here, but holding up in that overall bullish uptrend. Just some softness starting to happen as we've seen equities rally and not a lot of fear in the market. SLV, which is silver, also holding up nicely in these ranges as well, but getting some weakness starting to happen as we're testing that a little bit deeper retracement on SLV. A couple stocks to consider here today. AAOI, nice confirmation bar. Not massive volume here as it's moving towards that momentum zone again, but nice overall pattern. 60-minute time frame also showing some consolidation of trend, looking to expand, and gives a good risk profile, an area where you can set up your entry, set up your stop loss either below this low point or below the most recent bar, which is helps for that overall risk structure. The other stock to consider here, AMPS, which is a little bit deeper in that retracement, but getting really big volume, starting to move back into this name towards the bottom end of this trend, a little bit more aggressive move as you're trying to get some bottom fishing here taking place on AMPS. That'll do it for today's update. Everyone have a fantastic day today.